Hi there, welcome to Kneppy Invest. Time for another Kneppy's analysis video, and in this edition, I'm going to be focusing on a company called Washington H. Soul Patterson. There will be quite a few people aware of this company. Some others would associate Washington H. Soul Patterson with pharmacies, and that is quite accurate because originally Washington H. Soul Patterson, well, the founders of this company anyway, were in the pharmacy business. I'll talk about the history of this company in a little bit more detail in a second or so. Now, today, Washington H. Soul Patterson is an investment house with investments in a diverse portfolio of assets across a range of industries. Also discuss the sort of assets this company has invested in during the rest of the video. Now, Washington H. Soul Patterson listed on the ASX back in 1903, hence the number in their logo. And in the time since this company listed on the ASX in 1903, it has not failed to pay a dividend to its shareholders. So 121 years of paying dividends. Not only that, this company has a reputation of always increasing their dividends to their shareholders. And I'll show you the dividend history later in the video. Now, I'll just talk about the history of this company right now. And it is a sort of interesting history because back in 1872, Caleb Soul and his son Washington Soul opened their first pharmacy in, I think it was Pitt Street, Sydney. And then another guy called Louis Pattinson opened his first pharmacy in Balmain, near Rozelle, funnily enough. And Rozelle's all in the news, is in the news right now, in 1886. The men actually became friends. I think the two men who really became friends was Washington Soul and Louis Patterson, and they never opened a pharmacy in direct competition to the other. Now, when they combined forces, out of respect for his old friends, because I believe Washington Patterson or Washington Soul sold his pharmacies to Louis Patterson, and out of respect, Louis Patterson included the names of Washington H. Soul in the name of the new company, Washington H. Soul Patterson, hence the name. So the first public offering of shares was in December 1902, and Washington H. Soul Patterson listed on the Sydney Stock Exchange, now the ASX, on 21st of January 1903. The other facts in regards to this company, and this is true on December 4, 2023, founded in 1872 and 1886. Those are the two pharmacies. Listed on the ASX, 21st of January 1903. The biggest shareholder of Washington H. Soul Patterson is Brickworks with 26.1%, but there is a cross-ownership. I'll talk about that a little bit later in the video, and there's a reason why there is a cross-ownership. I think that's what they call a cross-ownership, is to stop hostile takeovers, that sort of thing. And I believe companies can't do this anymore. But this is sort of like a grandfather rule where because they've done it in the past and other companies are no longer to do it, this is still okay, that they've maintained a cross-ownership of the other. Share price on December 4, and this is before trading has begun, $33.71. With 361 million shares on issue, that means the market cap of this company is $12.2 billion. For full disclosure purposes, I am not a shareholder of this company right now. I have been a shareholder of Washington H. Soul Patterson in the past. I always struggle with this company in terms of, I do think this is a quality company. In fact, I'd probably define it as a quality or highish quality company. But I do have some problems with this company, particularly some of their biggest holdings. And I'll talk about that during the rest of this video. But right now, I'm not a shareholder, but I have held shares in this company. And if someone did mention they do have this company in their portfolio and they tend to hold it for the long term, I probably could not argue against that. And the reason behind that is just the returns this company has provided the shareholders over the past 20, 30, 50 years. The current CEO of Washington H. Soul Patterson is Todd Bow, and he's been in this role or that role since April 2015. So fair bit of stability when it comes to the management of this company. And before that, he was a managing director of Pitt Capital Partners, and before that, he was a lawyer. And he graduated University of Technology back in 2001. So rose up the ranks quite quickly to become CEO of one of the highest quality companies on the ASX. And I did sort of say that last part as a question. Is this one of the highest quality companies on the ASX? I actually won't go that far. But if someone did try to argue for that, I probably would not be vehemently against it. Anyway, now on to their assets. And this is where it becomes interesting. And this is how I judge the quality of this company, just by looking at their assets. I'm not going to look at the financial data because for this type of company, I don't look at that. I just want to know what this company invests in. And probably the most important portfolio this company has is their strategic portfolio. The reason it's their most important one is because 48% of their holdings are in this portfolio. And it is quite concentrated. In fact, I probably would argue it is heavily concentrated, with the majority of this company's shares or holdings in two companies, New Hope and Brickworks. And just behind that, we have TPG Telecom. And then far lower in terms of valuations, we have Tuas, Apex Healthcare, which I know nothing about, Ares Resources, and Pagana Capital Group. So really, your opinion of Washington H. Soul Pattinson is probably related to what your thoughts are in regards to New Hope, Brickworks, TPG Telecom, and on a much lower basis, Tuas Limited. Now, I do have a little bit of time for Tuas Limited, and one of the reasons behind that is I do think that is a potentially really good growth company in the future. Now, when it comes to New Hope and TPG Telecom, would I hold those companies for the long term in my own portfolio? And the answer to that is no. In fact, I don't have a lot of time for TPG Telecom right now. I did maybe 10 years ago, but not right now. And New Hope is a coal company, and coal companies can be quite cyclical. And I think there is a time and place to hold New Hope, and there is a time and place not to hold New Hope. So I'm not a big fan of investing in mining companies for the long term. When it comes to Brickworks, I probably do have a fair bit of time for Brickworks. I actually do like Brickworks, and so I don't mind this sort of relationship between WH Soul Pattinson and Brickworks. Apart from that, Apex Healthcare, Ares Resources, which I do think is a low quality company, and Pagana Capital Group, I don't have much of an opinion, because when you look at the value of those holdings, it's much lower, significantly lower than New Hope, Brickworks, and TPG Telecom. Another thing this company invests in is large cap companies. In fact, 21% of this company's investments are in ASX 200 companies. Now, I'll talk a little bit more about some of the companies they do hold a fair bit of money in. But when you look at this large cap portfolio and see the largest four holdings, you can see that BHP, Macquarie Group, CSL, and Coles Bank of Australia are some of the biggest companies, if not the biggest companies on the ASX. So you could actually classify this large caps portfolio as an ASX 200 ETF proxy. And to be honest with you, I'm not the biggest fan of ASX 200 ETFs. But wait, there's more. WH Soul Pattinson has a few other portfolios, including a private equity portfolio valued at just over $1 billion, or 11% of the whole group portfolio. This consists of quite a few privately held companies, or companies that are not listed. So it is a little bit more difficult to find information on these companies, which include Argyle Water Fund, Aquatic Achievers, Ironbark, and AMP Control. So we don't really know how these companies are performing, and I would like a little bit more information on that. But again, these are privately held companies. They also, for a little bit more diversity, this company also, Washington H. Soul Pattinson, also invests in corporate loans, bonds, and structured investments, and that's included in the structured yield portfolio, only worth $652 million, or 6% of the group portfolio. So now we get into the portfolios that really won't contribute much to the overall group portfolio success. So structured yield, no matter how this performs, won't significantly affect WH Soul Pattinson's financial performance. And finally, the last two portfolios this company has, and I just mentioned, probably should mention here, all these slide bits come from Washington H. Soul Pattinson's annual report, I believe. So you get a lot of information about the company in their annual report. Anyway, so the last two portfolios this company has is a property portfolio. Won't spend much time on this one because it's only 1% of the group portfolio, valued at $112.6 million. So a very small percentage of the overall group portfolio, which means The overall success of the group portfolio really is not dependent on property at all. But again, a little bit of diversification here. And the other portfolio, in fact, I like this portfolio, the emerging companies portfolio, 5.8% of the group portfolio, valued at 628.7 million. So this is X100 or ASX 100 listed equities and unlisted growth companies. Now, I have not seen any mention of what these unlisted growth companies might be. It's really hard to get information on that, but we do know, we can know what are these, some of the, and not only some, all of the ASX 100 listed equities companies this company is investing in and has put into the emerging companies portfolio. And the way we get that is simply by doing a little bit of research, not in the annual report where we get all this information on, but through some other channels. And I'll talk about that now. So one way of getting information on what companies, ASX listed companies, Washington H. Soul Pattinson is investing in is just by looking at changes or substantial holding announcements. So this is a few of the announcements the company released between July and August of this year. So for instance, on the 18th of July, the company released a change in substantial holding for BTI, which is Bayador Technology. They decreased their holdings by about 1% from 16.2% to 15.1%. That's of Bayador Technology, not of Washington H. Soul Pattinson. And then on the 31st of July, they ceased to be a substantial holder for Mitchell Services. And then on the 18th of August, they released a notice of initial substantial holding for MVF, which I believe is Monash IVF. So obviously, they're a little bit more bullish about MVF and a little bit less bullish, maybe even bearish on Mitchell Holdings. But there's another way we can see which companies, ASX companies, that Washington H. Soul Pattinson are investing in. And I get this information through ticker, TIKR. And in ticker, you can actually see every single investment a company like Washington H. Soul Pattinson has invested in. So let's have a look at that right now. And here we have the complete list. Well, not the complete list, because this does not include private companies. So only publicly traded companies are in this list. But we get a good look at what companies Washington H. Soul Pattinson has put their money into, 3 pages long. And when I say complete list, I'm talking about a complete list. This is through ticker. And all you have to do to get this list is go to one of these companies. For instance, New Hope Corporation. All you have to do is go to that company, have a look at their ownership, and then click on Washington H. Soul Pattinson. And then when you click on Washington H. Soul Pattinson, it brings up this particular list. So it's no shock to see that New Hope Coal is the biggest holding in Washington H. Soul Pattinson's portfolios, valued at $1.4 billion US dollars. For some reason, this is listed in US dollars. And then coming in at second is Brickworks. No shock there. And then TPG Telecom, then Macquarie Group. So Macquarie Group comes in at number 4. Apex Healthcare, which I know nothing about. Tuas, National Australia Bank, BKI Limit Investment Company, Wesfarmers, CBA. So no big surprises here. Then Perpetual, which is a little bit of a surprise. Eagers Automotive, Ares Resources, Johns Lyng Group, which is interesting because I'm fairly bullish in regards to that company. ALS, Rio Tinto, and then we keep going down the list. We have Lindsay Australia there, Ramsay Healthcare, Suncorp, Clover Corporation, which is a fairly small company, yet Washington H. Soul Pattinson has $24 million US dollars in that company. We also have InvoCare, Paladin, not only Paladin, Boss Energy. So Washington H. Soul Pattinson is fairly bullish on uranium just based off those 2 holdings. Megaport, Capital Health, Sideminder, Premium Investments, DDH1, which is now been taken over by Parenti, Bravura Solutions, Star Entertainment Group. That's a bit of a surprise. Retail Food Group, another surprise. Electro Optic Systems, which is not a surprise. I already knew that. Aussie Broadband. And then finally, Superloop, Tyro Payments, 29 Metals. Then you might be surprised. This company has an investment in Zip, $2.4 million worth. Mitchell Services, and then going down the list, And now we're getting into very small holdings. Firefinch, which I believe is will be a lithium exploring company. I might be mistaken there. Straker, Bluebet, LGI, Integrated Research, Tissue Repair, and then coming in last is Gold Hydrogen. And they've only they only have a $300,000 investment in that particular company. So you get a good idea on what sort of areas that Washington H. Soul Pattinson might be a little bit bullish in, what companies they think have potential for the future. Now onto the quality, and this is where I do struggle with Washington H. Soul Pattinson. And I would describe this company as being a highish quality, not completely high quality. And the reason I say that is because when you look at the returns, it's a little bit lower than what I would like. That's why I say it's a tough one. I think there would be investors out there who say this is a no-brainer. This is a high-quality company. And I probably could not argue against that, but it's just dependent on what you're looking for. And what I'm looking for is a company that is not invested highly or heavily in New Hope coal, not invested highly in TPG Telecom. And that's my main concern, those two companies. So what I've done here is look at the increase in book value, and that's how I sort of consider, or what I consider when it comes to valuing this company is just based off book value. So I want to see how book value has increased over time. So typically when I look at a company or research a company, I'm looking at revenue, that sort of thing. Revenue is less important for this company than book value. And there is a relationship between book value and total return. And that's quite obvious. When you look at the total return over the past 10 years and relate that to book value increase over the past 10 and 5 years. For instance, over the past 10 years, book value of this company has increased 7% per year. Over the last 5 years, book value has increased 12% per year. Over the last 1 year, 3.2%. Even return on equity, I'm not going to really focus on return on equity. It's mainly off book value and the holdings this company has. EBIT only 6.5, which is fairly low. But the total return over the past 10 years is 11.6% per year. Now, that's the sort of returns most investors won't dismiss. In fact, most investors would like 11.6% return per year. I am searching for a little bit higher than 11.6% per year. So that's just on me, what I'm looking for. Now, the dividend history is impressive. I'll talk about that in a second, but increases in the dividend are small. And it seems like maybe the company management is just focusing on just slowly increasing the dividends over time. That's not a bad thing, but maybe they're just so obsessed with making sure the dividends increase every single year, and maybe they're just focused on that. Total return and book value, compound annual growth, are slightly below my expectations. And I think that's the most important thing here. It's my expectations and what I am looking for. If this company had a total return of a 15.6% per year, I would be excited about this company. Well, a little bit more excited than I am right now. Now, one other thing I'm just going to discuss now is net asset value per share pre-tax and net asset value per share post-tax. This is something I questioned quite a few years ago, and I found a good answer around the time when I started questioning what's the difference between pre-tax and post-tax. And it was fairly obvious. It has to do with capital taxes, capital gain taxes. So when you make an investment and the share price of that company increases over time, you have to pay a capital gain tax. So does Washington H. Soul Pattinson. So when you do say that post-tax, that means that's including the capital gains they will have to pay if they sell their holdings in that company. And that's why the post-tax is significantly lower than the pre-tax in financial year 23. So right now, the net asset value per share post-tax is only $27.08. And I want to compare that value to the current share price of the company to consider whether, in my consideration of whether this company right now is good value, undervalued, or overvalued. So $27.08 is the number to keep in mind. And here is the company's dividend history over time. So 23-year compound annual growth rate, 9.6% per year, which is actually okay. But that also includes the last 2 years where dividends have just gone bonkers. And one of the reasons dividends have gone bonkers over the past 2 years is because of New Hope, because that company has given their shareholders a massive amount of dividends because price of coal a few years ago was unbelievably high. But back in 2000, this company had dividends of 11 cents per share. Now it's 87 cents per share. So it's increased eightfold over a 23-year period. And there's not been one single period here or one single year here where dividends have not gone up, apart from between 2000 and 2001. Now, I have been at times a little bit negative on WH Pattinson because the total share returns this company has given their shareholders has been a little bit lower than what I would like. But in saying all that, if I had a choice between WH Pattinson and ETFs, I probably would choose, maybe not probably, but I definitely would choose WH Pattinson over ETFs. And in this particular slide, explains why. So WH Pattinson total share return compared to the All Ordinaries Accumulation Index over 5 years, 10 years, 15, and 20 years. So let's just focus on the last 20 years. The WH Pattinson total share return over the last 20 years is at 12.5%, which is pretty good, particularly when you compare it to the market. The All Ordinaries Accumulation Index return of 9% per year. What would you prefer? 12.5% per year or 9%? And even if you look at 5 years, 10 years, 15 years, and financial year 23, WH Pattinson has outperformed the market. So if I had a choice between WH Pattinson and ETFs, I would choose WH Pattinson. But for me, it's choosing between WH Pattinson and individual companies I could invest in. And for me, it's the individual companies that I could invest in simply because I probably would not invest in New Hope Coal and TPG Telecom. Now let's have a look at the charts for WH Pattinson. We're going to look at a long-term chart here. This is actually a monthly chart. In fact, it's a log monthly chart going back to 1990. And this is a sort of an example of a high-quality company's chart from the bottom left to the top right. In fact, in late 1990, the share price of this company was less than $1. So the share price of this company has gone from $1 to over $30. So a 30-fold increase in the share price over a 30-year period. That's probably what you want over a long period of time. Now, there are some times when the share price does fall back, and sometimes when the share price goes on already. But over time, the share price of this company has increased. So, and that sort of is evident in the dividend, that this is a growing quality company. Dividends have increased over time. The share price of this company has increased over time. And that's the main reason why a shareholder might consider this to have in their long-term portfolio, because this company is a growth company. At times it might be slowly growing, but it is a growth company. And if we zoom in on the monthly chart, this goes back to 2000. So looking at the last 20 years, and you can just see a beautifully moving upwards chart. Now, if you do look at the last, say, 5 years, there's been a little bit more volatility in there compared to the first about 18 years. I'm not sure why there's more volatility in Washington H. Pattinson. You can see the mountains and the valleys are more distinct than what we saw early in this period. And right now, the share price has rallied beautifully off the most recent low. In fact, that most recent low, when the share price got down to almost $22, was the time to buy this company. And I was thinking of buying Washington H. Pattinson at near or at those lows. And unfortunately, I decided not to, simply because I don't consider this to be necessarily a long-term hold for me, but a beautiful looking chart over a 20-year period. And to really exemplify, is that the right word? To really show that volatility over the past 5 or so years, this is the daily chart going back to late 2018. You can just see the wild ride in share price over this time, which is really weird for a company like this. But I think it just shows you the overall volatility we have seen in the market since 2018. Remember, was it late 2018 when the share price or the market did fall a fair bit? I can't remember right now. And you can see the share price dropping back in the COVID-19 all the way down to $17, and then the recovery, V-shaped recovery in the markets. Share price of this company went from $17 to $41 over about a 2-year period, we'll say 18-month period, and then the share price just nosedived when there was overall weakness in the market. Remember, that's when the interest rates started to rise, and Washington H. Soul Pattinson was affected by that. Share price dropped from $41 all the way down to $22. Share price is looking nice since that low. In fact, the share price right now is in a daily uptrend. Now, the question is, I do think I would not consider this company to be good value right now or even undervalued. I think it's either fair valued or maybe even trending towards being overvalued. The next 5 companies I intend to do in this Kneppy's analysis series include Perseus, Macquarie Technology Group, Dusk, Aristocrat, and Cube Holdings. That's all I have for this fascinating company called Washington H. Soul Pattinson. I always struggle to say that name. It's been on the ASX since 1903. It has never failed to pay their shareholders a dividend. In fact, dividends have been increasing since 2001. If you have any questions, any thoughts about this company, if you think I'm completely wrong, and maybe I'm being a little bit too harsh on WH Soul Pattinson in saying this is not just a high-ish quality company, not a completely high quality company, and not one of the highest quality companies on the ASX. Maybe I am being a bit harsh. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.